Hey everybody, this is Jim at SP500chart.com. It's about 4:15 on February 18th, 2014, and we're going to take a look at the first trading day of this shortened week. And before we do so, I need to remind you, as always, that the website and the video are for educational purposes only, and nothing stated at the site or in this video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. And this is kind of interesting what happened today. Some technical things took place, and we've got a decision to make. And it's just a little interesting. So let's take a look. Starting out here on a 15-minute chart, the first thing that's going to come to your attention is this rising channel defined by these two perfectly parallel green lines. And what you're going to note is that we closed on the underside of this support line. You'll also see that we bounced on this line early in the day, at which point it looked really good that this line would hold up. But we just traded straight through it. This was not, we talked about it when we were back looking at the chart on the day of February 12th, is that we at that time, just by way of reminder, we had a trend line on the chart that was, I believe, something like this. You may remind me if I'm wrong, but it was a fairly narrow little channel, and we broke through that, but not in a way that looked like there was really that opened the floodgates of selling. As a matter of fact, it looked worse back then than it looks today. So that kind of makes me go, okay, what then is the story here? Well, first off, we're not underneath this line by a, quote, technically significant margin. So being under this line by about 3 or 4 points isn't really critical mass. We also have a target that is still standing from our shoulder and head and flipper pattern, inverted. I hope that sounded kind of crass, but it is like that. It's like we have a shoulder, an inverted head, then just this little meaningless appendage over here on the right side. But we've seen these before, and they have so far made their targets. So we've got a target still of about 1858 that we're looking at from this pattern getting over resistance at roughly 1798. So what do we think? Well, first thing is, I want to do a little experiment here. We're going to take and we're going to drop a horizontal line right at the day's highs, right there. And you see that line is at 1842 and change. Now, let's zip back on our chart and take a look, and you'll see that we have basically, I think what happened today was we ran into a little bit of gap resistance. And just to remind you, gap resistance is where people who got caught flat-footed, traders, not investors, but traders who got caught flat-footed back on the 23rd of January have probably said to themselves, I should have sold before that gap down, and instead of me getting out at 1844, which was where the market closed the day before that gap down, I sat through 1, 2, 3.5 weeks of losses. And if we get up close to where we were, the day that we broke down on the 23rd, I'll consider exiting my long positions. So that's why you get gap resistance, and the opposite is true of gap support. Just take what I said and flip the sentiment and the situation upside down. So, but here's what's interesting. We did not break this line in a manner that looked like something significant took place. It's almost as if we just came up to this and we wanted to rally off of this line to bounce up, but just hit this little wall up here at about 1842 or 1842 and a half, and traded sideways for the last couple of hours. Just an interesting situation. So, with that in mind, I'm not abandoning this target. I'm going to keep that 1858. I'm going to keep that on the chart. I think it has a very good chance of hitting, and it could be we go sideways and gather a little bit of steam, then rally back up. Maybe even to back test this line right here, this support line. So there's a couple of different things that can happen, but I'm not willing to abandon this. Now, if we had come down when we broke this line, if the S&P upon taking this line out had crashed down to 1820 and then started to rally back, then I would say, yeah, this line broke. We are now rallying back for a back test. But that just isn't what happened today. So, again, I don't think the wheels have come off. I just think we just hit that gap resistance. It makes sense. And it could be that at some point in time we end up revising this channel again. I don't know. I'm not going to revise it now because I think this is the best approximation that I can conceive of. And one of the things that makes me feel that is the fact that this line is perfectly parallel to our resistance. And it also lines up very nicely with this starting point and this point. Maybe if we get another bounce and we start to get a little bit more data, maybe we'll have an opportunity, or the market may require us to revisit the definition of this lower support line. But right now, I think the best thing to do is to leave it where it is and just say, yeah, the market is trying to sort out what it wants to do here. It doesn't want to fall down, but it also has encountered this resistance at about 1842 or so. So tomorrow, I would just watch this again. If we get up over this line, that little bit of built-up resistance that we saw throughout the entire day could end up in a nice little upward move. So let's not give up on 1858 quite yet. I wouldn't take what happened today as a particularly bearish thing. Certainly, it would have been more bullish had we bounced early in the day and then closed up closer to 1850. But that was not to be. It is what it is. So if we do come back down, then we've got some support underneath us. I don't think the wheels would really come off. So, guys, that's your video for the day. Just one more quick thing. If we look at a 2-minute chart, which I don't do very often, and you take a look at the last, let's say about the last day and a portion of a day of trading, we know we got a low here. I don't think we can really, extend that. It could be that this is a little consolidation here, but I think really the most outstanding feature on this chart is the resistance at 1842 and change. So I'm not even going to worry about this line. Let's just see what happens in relation to that 1842 line, and if we sell off a little bit more heavily tomorrow, then we might need to talk about this in a little bit different context. But for right now, it doesn't look like anything's really busted in the chart. So guys, I've talked about this way too long. Thanks for watching. Thanks for your patience as I ramble. I think I've been doing these videos now for what is it? When did I start? About 3 years and 4 months, and I just have a hard time keeping it really short and sweet. I would rather say too much than too little. But thanks for watching. Take care.